Welcome to Grace Kennedy's Investors Briefing. My name is Don Webby. I'm the Group Chief Executive Officer. With me is Mr. Frank James, Group Financial Director for the Grace Kennedy Group of Companies. We welcome all participants who have joined us via the internet for this audio conference. This briefing has been scheduled for 40 minutes. We will use 25 to 30 minutes of this time for presentations and the remaining time to accommodate your questions. During the question and answer session, you are welcome to share your questions by emailing us at gkinvestor@gkco.com. Let me repeat that, gkinvestor@gkco.com. Or you may also call or send a text to our communications team at 876-809-0464. That is 876-809-0464. I will start off this investors briefing by offering a few comments on our 9-month results. It's September 2018. Then I'll ask Frank to expand on some of the numbers that I will share with you this afternoon. But once again, ladies and gentlemen, thank you for joining us for this investors briefing. For the 9-month period for September 30th, 2018, the Grace Kennedy Group achieved revenues of $73.8 billion. This represents an increase of 6.5% or $4.5 billion over the corresponding period of 2017. We're also pleased of our profitability for the 9 months. We reported profits of $3.71 billion. Included in that $3.71 billion, when you're comparing it with the previous year, in the previous year we had non-recurring expenses of $455 million, primarily related to the liquidation of non-operating subsidiaries. If you were to normalize that number, our increase in profitability year over year would be 12.6%. And I'll ask Frank to expand on that in our briefing. The Grace Kennedy stock price closed at the quarter, September, at $59.49. This represents a 35.7% increase since the start of the year. And if you were to compare that number with the movement in the JSE index, was 24%. So what this is saying, colleagues, is that our stock price is appreciating faster than the market at this time. You'll recall at the AGM, we spoke to our shareholders about this transformational journey of the Grace Kennedy Group, aiming at improving performance and shareholders' value. I am extremely happy to report that that exercise is almost complete, where we looked at the organizational design, the cost structure, and business processes. This will result in savings that will be payable within a year, or the return will be within a year. The total cost of that exercise was approximately $236 million. And as I said, the payback will be in less than a year. Just to remind our colleagues, the restructuring exercise was primarily driven at the central functions in the Grace Kennedy Group, where we did an exercise and it was clear that there were duplication of costs throughout the group. By central functions, I mean the accounting department, compliance, legal, IT, and HR. And basically what we have done is to rationalize across the group these functions. And as I said, consultancy fees and redundancy costs, which was about $150 million, we expect the payback to be less than a year. I'd also like to make the comment that this is going to be a continuous exercise where Grace Kennedy strive to be world-class in terms of efficiency, and for our team here at Grace Kennedy to execute. We call it flawless execution of the Grace Kennedy team. In terms of our food trading division, once again, the food trading division has been performing exceptionally well. For the first 9 months, you will see that there's growth in both revenue and pre-tax profits when compared to the corresponding period of 2017. We did a very interesting campaign this year, and I'm sure some of my listeners would be very familiar with it, where we actually made a decision that while retaining our current customer base, there is a market out there that GraceKennedy, we would want to engage, and it's called the millennials. So we started with a flavor with a beat campaign, and we went on with Ding Dong, who was signed on as our GK ambassador with flaring mackerel. When I read the comments on social media, and yes, I am on social media, they were remarkable. The feedback from our target group, the millennials, was really, really fantastic. And in fact, they posted videos with them cooking our mackerel. So I think that's a huge success. Consumer Brands Limited, which we acquired last year, the Procter & Gamble portfolio, that is performing well above our expectations, and the objective is to introduce new products in the market. So that acquisition has gone extremely well for the GraceKennedy Group. Manufacturing, that's another segment that has performed well. And if you look at the manufacturing unit, we have 5 factories. Our retreat, executive retreat, was on Monday, Tuesday, and we made a decision that we want to increase our products produced at our manufacturing plants for export, which is now at about 25%. We want to double that by 50%. What is double that to 50%? So what that is saying is that GraceKennedy, as a company in Jamaica, will be reinvesting significantly, both in human resources and capital, to modernize our plants, so we can meet the demand to export our products, and we're going to increase that. The objective is to increase that to 50% by 2022. So half of the products being produced by our 5 factories will be exported, and we are very, very focused on achieving that objective. You recall that I also reported that our main product in our UK market, nourishment, we're having our challenges in terms of growth. I'm happy to report that nourishment has shown an increase in growth, in revenue, over the last quarter when compared to the last quarter of last year. Europe continues to grow, driven by the performance of the Grace brand, which is very exciting. We own a brand in the UK, Rio Pacific Food, which is ready for the food services, and we are seeing significant growth in France. Grace Foods Canada continue to be one of our stars in the group, and we are seeing improved performance year over year. I remind you that we are the category captain in Walmart, and we are seeing actually double-digit growth for Canada. I also remind you that we have we are number one in the coconut water category in Canada. Bank and investment, it was a challenging 9 months for us, and Frank will expand on that, where we saw a decline in revenue and pre-tax profits. But we believe that we have a clear strategy in place for the bank to grow, and this would include our agency banking. Think about it like this, colleagues, that Western Union locations, we have just about 150 in Jamaica. And what we want to do is to convert, let's say, a third, 50, to agents. So what we're saying is that First Global Bank could or will have a presence in these locations in the short term. GK1 locations, under one roof, you can do your remittances, bill payment, micro-lending, insurance, commercial banking, as I said, and Cambia services. We have started to roll that out very successfully. GK Capital and GK Investment, our investment company, has been having an exceptional year. Our expansion in the Caribbean in financial services continues, where the Signia Financial Group, where we own 40% of, is an associated company in Barbados. We actually acquired Global Finance there. So GraceKennedy, our 40% shareholding in Signia Financial Group, we now have the largest merchant bank in Barbados. I know most of you, or those of you who drive downtown Kingston, would have seen the significant progress we have made with our new corporate headquarters. We remain on track. We expect the building will be completed by December of this year, the end of this year. That's in a few weeks. And we are targeting to moving during the first quarter of next year. I remind you that GraceKennedy investment in that building is about $3 billion. Well, there are a number of benefits which Frank will speak about in terms of the Urban Renewal Tax Relief Act. I will stop here now, and I'm sure there will be a lot of questions during the question and answer period. Ladies and gentlemen, over to Mr. Frank James, our CFO.
Thanks very much, Don. As Don indicated, our revenue performed well for the first 9 months, with revenues up by $4.5 billion, or 6.5%, reaching $73.8 billion. We saw growth in 2 of our 4 segments, insurance and food, with banking and money services down. We're pleased, however, that in the case of money services, when we look at the third quarter showed growth over the third quarter 2017. Our pre-tax profits for the group was $4.7 billion, down 4.8%, and our net profits $3.71 billion, down 1%, or $39 million. As Don indicated, we had a non-recurring gain in 2017, which related to the successful acquisition of Consumer Brands Limited, as well as the liquidation of some non-operating subsidiaries. So when we adjust for that, our net profits would be up $415 million, or 12.6%. The other factors that would have impacted the performance in the third quarter would have been the separation and related costs that Don spoke about of $236 million, which we'll start seeing the benefits of going into the fourth quarter and into 2019 as a result of a more efficient cost structure. Adjusting for both the non-recurrent costs in 2017 as well as the separation and related costs in 2018, we would see that our pre-tax profits would be just about $5 billion, a 10% or $453 million increase, and our net profits would be up approximately $600 million, or 18%. This reflects the fact that we had accelerated growth in both revenue and profits in the third quarter, which we are pleased about. Looking back at the full 9 months, we had strong profit performance for the food trading segment, up 20%, and the insurance segment, up 35%. While year-to-date profits for banking and investments was down 2%, and our money services down 4%, both of those experienced growth in profits Q3 2018 versus Q3 2017. Looking at a little more detail at the various segments, our food segment continues to be the largest contributor to revenue, contributing $4.2 billion of the $4.5 billion growth, or 8% growth, with a growth in profits of 20%. Our Jamaican food business grew 12% in revenue, and our international markets grew 4%. An important part of the growth for the Jamaican business has been the good performance of our Procter & Gamble portfolio, as well as the addition of our Catherine's Peak spring water. But we also had very strong performance from our core products in the Grace line, such as our corned beef, which we have seen a good rebound from, our Vienna sausages, and in our beverages portfolio, the Tropical Rhythms drink, all delivering strong double-digit growth for the 9 months. In addition to revenue growth, we also saw good profit growth in our Jamaican food business. On the international market side, we saw growth in most of our markets, notably in USA and Canada. In the USA, both the Grace and the Lafayette brand continue to deliver growth, and the US operations continue to deliver improved performance. Our Canadian food business contributed meaningfully to the growth in revenue. We saw strong performance, as Don mentioned, in our large retailers such as Walmart with double-digit growth. And Don reminded us that we're the leading coconut water in Canada, but we also now dominate in the jerk seasoning category as market leader in jerk seasoning in Canada. We see this as a strategic product with good growth potential. We had previously reported in relation to our UK business that we had seen declines in sales of nourishment, milk-based drink. However, we are pleased that in Q3 we were able to turn that into a growth figure for nourishment. And we are also very excited about the double-digit growth in Europe, where we continue to see significant growth opportunities for our UK business. Another revenue and profit driver for the group was our insurance segment, where we saw revenues up $670 million or 15%, and profits up 35% or $181 million. A lot of this was driven by our underwriter, GK Insurance, where we saw good growth in both the motor and the property portfolios. And you would have also seen across the island the significant road infrastructure projects that are taking place. And we're very pleased that we have been the insurer for most of these projects. And so we have seen strong growth in our engineering portfolio at GK Insurance as well. So the revenue growth in our insurance segment plus good returns on our investment income have led to strong profit performance for the insurance segment. I mentioned earlier that banking and investment segment was down in revenue. They were down 4% and profits down 2%. As we have seen interest rates coming down, we have had in First Global Bank a reduction in our yields, and that has impacted both revenue and profits, as well as the restructuring costs that would have been in the bank. The bank continues to focus on access, convenience, and service, and that has been rewarded by our customers, where we see a growth in our deposits of 8% or just over $2.6 billion year-to-date September. We intend to continue to drive this growth. As part of that drive, we continue to execute on our financial inclusion strategy, as Don outlined earlier. GK Capital and GK Investments, also in our banking and investments segment, continued to perform well. In our money services segment, while revenue was down year-to-date 3% and profit down year-to-date 4%, we saw growth in the third quarter over third quarter 2017 in both revenue and profit for our money services segment. We continue on our path to becoming a global consumer group with 60% of revenue outside of Jamaica. As at our September timeline, our revenue outside Jamaica was 47%, with North America standing at 26%, and Europe, including the UK, at 14%. Turning now to the balance sheet, total assets increased by 5.4% or $7 billion to $137 billion. This was driven largely by growth in cash and investments, and that was as a result of the growth in deposits in FGB that I spoke about earlier, as well as strong generation of profits for the group for the 9 months. We saw increases in receivables, primarily on the food business side, driven by the revenue growth, and we continue to manage carefully our receivables for the group. We also saw growth in our fixed assets, and this reflects the continued investment in the group for growth, with capital expenditure of over $2.1 billion year to date. A number of the notable projects that we have been invested in is our expansion of our distribution center so that we can accommodate the growth in our Jamaican food business, as we also reduce costs such as outside storage. So that is a significant investment for the group. We're pleased that we're needing to expand our distribution center to deal with the growth that we're having. We have also renovated our newly acquired Denby manufacturing facility, where we'll be seeing the introduction of new innovative products for both the Jamaican and our international markets. As Don mentioned, an important area of investments for the group is our manufacturing business, and will be going forward. So we continue to see a fair bit of our capital expenditure dedicated to manufacturing. Of course, GK's new corporate offices have continued, and we expect to continue to see the benefits of that this year. The Urban Renewal Act gives us a number of benefits, including tax credits against future profits. We take those tax credits in the year of construction. So we would have seen a benefit of about $416 million in 2017, and we anticipate a similar amount for 2018. Our pension plan asset also had strong returns and therefore increased the asset side of the balance sheet. On the liability side, we saw growth of 4%, largely driven by the strong growth in deposits for FGB that I mentioned earlier, but somewhat offset by a reduction in debt. So the group's debt-to-equity ratio now stands at just over 32%. In terms of our shareholders, year to date, we have declared dividends of $1.35 per stock unit, or just over $1.3 billion. This represents an increase in dividends of just under 20%, 19.5% over the period. And if that is combined with an increase in the GraceKennedy stock price of over 35% up to year-to-date September, we see this as an effort to really do a good return to our shareholders, both in the form of cash as well as in the form of capital gains. As at September end, we had a price to book of just over 1.1 times, which still we think leaves meaningful upside for the GraceKennedy stock when compared to the market multiples. The group's equity position continues to be very strong, growing by $3.2 billion to over $48 billion at the end of September. Over to you, Don.
Thank you very much, Frank, for that very comprehensive and very clear presentation of our financial results. We're getting quite a few questions, and I'm very happy that our listeners are really engaging us. Thank you very much. So the first question, Don, what are the plans for improving the high-low store located at the UWI campus? I'm quite sure that that person that asked that question actually saw me in the UWI store on Tuesday. Yes, I did tour the UWI store on Tuesday, and the plans are that we're going to be refurbishing that store. One of the challenges that we have, to be very honest with you, is that we would like more space at the University of West Indies. I noticed that there are long lines in the store, and there are 2 cashiers. So I will try and engage the leadership of the University of West Indies to see if we can get some additional space there. But the plans are to refurbish the store, and it's well warranted in terms of what I'm seeing there. So thank you very much for that question. The other question is, to what extent is GK targeting the Northern Caribbean region, Cuba, Haiti? Again, I will actually be visiting Cuba with a team end of November to have discussions of how GraceKennedy can increase our business in Cuba. There's a slight challenge. What is happening is that when you sell to Cuba, in terms of your contractual arrangement for payment, it has to be done through Exim. What is happening is that the amount allocated to Exim for the Cuban line of credit is only $5 million US. We have made representation to the government that for us to really make a significant impact in terms of export sales to Cuba, that $5 million line of credit through Exim is inadequate. So we will have to look at that again. And when I said we, I don't only mean the GraceKennedy group of companies, but the private sector in Jamaica trying to break into the Cuban market. Haiti, we're looking at an opportunity as we speak to get into our Western Union. Discussions are going very well, and we are hoping that we should be able to make an announcement in terms of making an investment in Haiti as it relating to our Western Union business. Mr. James, IFRS 9, difficult to understand. What is the impact on your accounts for September IFRS 9? And maybe you can say what IFRS 9 is.
Sure. Thanks, Don. So we had a successful implementation of the new accounting standard IFRS 9, which looks at how we deal with the impairment of our financial assets, receivables, etc. Most of the adjustment would have been made in our opening retained earnings. And in the note to our quarterly accounts, we go through that in quite a lot of detail on note 4. So there was an adjustment to our opening equity of $763 million reduction as a result of the implementation of IFRS 9. IFRS 9 is now a standard part of how we have been operating within the group. So in terms of the impact during the year, that would be part of our normal provisioning for our loans receivable, receivables generally in trade, and our financial assets. But the implementation has gone smoothly.
Thanks, Frank. Don, this is quite funny how they wrote this. Roadworks, high-low, Barbican. So this is a story. The Barbican store, we took a big hit when the roadworks was in progress. I think our revenue for that store alone went down by between 30 and 40%. The good news is that since the completion of the roadworks, we are now back up to where we were before. So we have recovered the 30 to 40%, and we are hoping for growth. Having said that, the Crossroads roadworks is impacting our Manor Park store, which is one of our more profitable stores. So what we are planning to do is to have a delivery service where you can call in to the Manor Park store and you get your groceries delivered, because we recognize that it could be very inconvenient for some of our customers to come to the Manor Park store given those roadworks. Ideally, what we'd want is to create an app where you can go on that high-low app and put in your order, and then it will be delivered to your home. So so the roadworks, negative impact, but we have rebounded nicely since the completion. Manor Park, we're going to be more proactive in terms of having delivery of the products, and with the hope that we can even get an app in place for delivery. High-low on a whole is doing pretty well. We consider food retail a core business, and again, as you know, we have invested over $8 million in refurbishing High-low, and that will continue. Thank you. What's GK Africa's strategy moving forward? That's a really, really good question. So we had said that at the AGM that we were looking at the business model to make it more efficient and make it more profitable for the GraceKennedy group for our African business. And I'll give you an example of where we were and where we are. So Ghana last year for 2017, we reported revenues of $125 million, Jamaican dollars. That is less than 0.1% of GraceKennedy's total revenue. We recognize that to really grow this business, as you know, we have said that Africa is a strategic initiative to grow our business in Africa. Our mackerel and corned beef and our juices are doing well. But we also recognize that the cost of distribution based on the current model was not efficient. So we made a decision that we're going to try and appoint a third-party distributor, or we form a joint venture with a local business person. That has not materialized as yet. So what you'll notice for our full year for 2018, you're going to see a reduction in that 125 for 2018. Having said that, we are having discussions with a number of potential partners in Ghana, so I expect 2020 to show some recovery. Mr. James, your note to your third quarter results show that there is, what is this? Oh, an assessment by the Guyana Revenue Authority for GKRS. Can you please expand so the shareholders can get a better idea of what is happening? Frank, that's you.
Thanks, Don, and thanks for the question, listeners. So as noted, there is a contingent liability which we have advised in the notes to our financial statements related to an assessment by the Guyana Revenue Authority for just over $240 million. This, as I indicated, is a contingent liability. It has not been booked in our accounts, and that is because the advice we have received based on our discussions with our attorneys is that we have a very strong case for the position which we hold in this matter. The discussion around the assessment is whether GKRS Guyana is a commercial company or a non-commercial company. Both types of companies operate at different commission rates, where a commercial company would have an effective tax rate in the region of 40%. A non-commercial company would be 27.5% to 30% over the last few years. The regulations require that we pay over funds to the Guyana Revenue Authority while we appeal this, and we have done so, and we have also filed an appeal in the Guyana Supreme Court on this matter. As indicated, we remain confident based on advice from our legal counsel that this matter will go in our favor, and as such have not recorded anything in our financials in terms of a provision.
Thank you, Frank. I love the expression of some of our questions. Bossman Don, we're going with the exchange rate. That's so cool. All right, let me try and answer it in a very structured way of what is happening with the exchange rate, because I know that question is also aimed at the private sector. So I'll answer it with my own facts. All right, so we finished last year, or another way to say that, we opened this year with an exchange rate of 124.75. The calculation that certainly we use at GraceKennedy and a lot of economic planners is that you use the differential in inflation rate with your major trading partners. So let's look at that. The inflation rate, the projected inflation rate calendar year for Jamaica is somewhere around 5%. The inflation rate projected for the US is about 2.4%. So if you do that calculation, you'd see that there's a differential of about 2.6%. So what that is saying is that when you put that in the model, you would expect the dollar to devalue, the 124.75, by 2.6%. If you do that calculation, you therefore expect the rate of exchange to be approximately $128 by the end of the year. So to answer your question, Wagwan, the current rate is about 126.50, somewhere around there. I would expect relative stability for the end of the year, with the dollar ending up anywhere between 126 and 128. I think if it's lower than that in terms of 126, then you're going to lose your competitive advantage in your export market. And of course, the hotel sector would be not as competitive in terms of the exchange rate. So I'm no economist, but based on my calculation, a rate of between 126 and 130, we should finish the year at, and that would be really in line with the inflation targets for for Jamaica and for the USA market. I'm just trying to get all of these questions in place. With respect to the new building, what is the space allocation and which divisions will be moved to this location? Another good question. So, we have been referring to our project as the corporate headquarters of the GraceKennedy Group. And that's so. When we actually did the reorganization of the group, as I referred to earlier, our corporate headquarters, as we knew it, is much smaller. We now have a much smaller corporate headquarters. So we are now referring to our corporate headquarters as an executive office, because we have less people in that sector, or in that office. So we have a number of rented offices for Western Union, GraceKennedy Money Services in the New Kingston area. What we're going to be doing is giving up that rented space in New Kingston, and the building will be primarily the Western Union GKMS offices there. The executive office will also be relocated from 73 Harbour Street to that building. What I'll say to you, and I've said it before in other forums, that the building consists of a lot of parking, because if we're going to develop downtown Kingston without planning for parking, we're going to have a very congested and uncomfortable downtown Kingston. So we have allocated, I think Frank, is about 300 spaces, yes, of 300 or 400 spaces of parking. And I tell you, that is only for the GraceKennedy staff alone. So when I'm reading about development of downtown Kingston, I hope the urban planners take into consideration the increased parking that will be needed going forward. So, question, Western Union GKMS will be there, the executive office on the top floor, and we are really hoping that we can move in during the first quarter of next year. Mr. James, what is accounting for the increase in direct and operating expenses? Frank?
Okay, thanks. As we mentioned earlier, we do have our separation and related costs, professional fees, which amounted to some $236 million. That would be reflected in our direct and operating expenses. We also have our IAS 19 and IFRS 2 adjustments. IAS 19 relates to our pension and other post-employment benefit obligations, where we would have seen a reduction in the assumption of the interest rate, and therefore, because our pension fund is well funded, you would see the net interest income reducing on that and resulting in a higher net expense. IFRS 2 costs relate to our stock option expense as we continue to look at ways to align management and the stockholders' interests. We also have seen an increase in motor claims in our insurance business. That's something that we're assessing very carefully because we have seen the frequency and severity of motor claims increasing, while we have also seen good growth in the portfolio itself. Another area of cost increase would be depreciation, and this really reflects the kind of reinvestment that we're making in the business. We have invested in our manufacturing, as Don spoke about. We've also invested in high-low significantly over the years, and we're seeing the benefits of that. We're hearing the compliments from our customers, and we're seeing the growth in the basket sizes as a result of that refurbishing. We've invested a lot in technology to really improve both our efficiency internally and also to give greater access and convenience to our customers. And so all of these reflect themselves in a depreciation cost. Those would be the main items that have resulted in the growth in direct and operating expenses, which we expect to have the payoff, as Don mentioned, in the case of our separation and related costs in less than 1 year.
Okay, Don, how is Brexit likely to impact the UK business, and our plans regarding Germany is still in the pipeline? Another good question. So I think when you watch the news with what is happening with Brexit, there is still a lot of uncertainty of how the final form of Brexit will take place. But we are preparing for that. So there are a couple of things. We need to look as a group of how we can manufacture more of our products in Jamaica to be exported to the UK. And if we are not competitive in that regard, we need to look at opportunities to be actually manufacturing in the UK for sale in the UK. I remind my listeners that we actually own a factory in the UK, Corwin, which produces a number of sauces and soups, Encona sauce. So that will be a big advantage for us. As it relates to Germany, we continue to have discussions with a partner with the aim of trying to see if it makes sense for us to acquire the company, and we are actively looking to see if there are opportunities there for acquisitions. I'll say this though, that we just appointed a new managing director with tremendous experience in Europe, and his name is Mr. Phil Cross, and he has said to the board and to myself and Andrea Coy that, listen, I want to get some time to look at how we're going to really grow. Because one of the things that the board of UK, and by extension the GraceKennedy, the main board, we're very confident that while we are showing double-digit growth in the European market, we believe that the potential is significantly more. And as I said to Phil, let us get it right the first time, and he has asked until July of next year to present a plan to the executives and to the board of UK for a final sign-off. So we are looking at that now. But I guess the main point that I want to make, colleagues, is first, get it right the first time, and that there's going to be significant upside for GraceKennedy to sell to Europe. When you look at, and you see what is happening in Germany and Holland and France with our coconut products, it's really encouraging. So we are very happy about that. Frank, I'm going to ask you to take this one here. A number of commercial banks have been centralizing their operation to become more efficient. What are FGB plans, if any, to follow suit? Good question.
Great question. In fact, we have done quite a bit in this area, and it goes beyond FGB. We have looked at the entire financial services group, and we have centralized a number of functions within the financial services group, within the restructuring that took place in the third quarter. So we have looked at a number of our support areas such as finance, HR, IT, and centralize those services so that we can get synergies across the entire financial services group. So that's our money services business, the bank, or capital markets and investments business, and insurance. So we are going to be seeing the benefit of that going into the fourth quarter and even more so in 2019.
Thank you. Don, compliance. You have been saying for the last 2 meetings that compliance has to be a competitive advantage. Carla, you are so right. If you ask me what is the challenge that we face in the GraceKennedy group, is that of compliance. I have mandated and taken personal responsibility for compliance in the GraceKennedy group, and I'm saying that compliance must be a competitive advantage for the GraceKennedy group as it relates to our Western Union business. Our sole objective and focus is to be best in class. Having said that, we have engaged Ernst & Young International and Jamaica to do a comprehensive review of our compliance structure and our compliance program, the technology that we are using, so that we can implement ASAP. I just read in one of the online papers that one of our competitors, I shall not call the name, was just fined $125 million for AML lapses, which is very, very serious. So we want to stay ahead. We want to be proactive as it relates to compliance, and we want to be best in class. I strongly believe with GraceKennedy and Western Union operating in 11 countries, that if we can get compliance right, best in class, along with our digital rollout, the best is yet to come from that segment of our business. Sorry, I'm just trying to. There are a lot of questions. This is good, and my colleagues here are saying that I have time to wrap up. All right. I just want to. I want to take these questions. Let me see. Can the questions be sent in after, or can I answer after? All right. Hold on. Let me just find my paper. I'm so sorry, but I think colleagues, this is the best I've seen for a very long time in terms of the questions coming in, and unfortunately, we have run out of time. But this is so encouraging to see these questions coming in. Really, really appreciate it. So let's do this again. I'm going to read how we can complete this exercise, Dion. So can you email us, please, those who had further questions, gkinvestor@gkco.com, or you can send a text to 809-0464. What about these questions that I have not answered? How can I answer them so that everybody can see it? How does that work?
We can put them on our corporate website.
Okay, all right. So we're going to questions. If you sent in a question, which I'm sure you have, and I have not, or Frank have not answered them, I'm going to answer them, and it's posted at our corporate website. And we're going to try and do that certainly by early next week. So once again, ladies and gentlemen, we'd like to sincerely thank you for joining us today in our quarterly, our briefing. I would say to you, in closing, that we expect that the financial year ending 2018 is going to be a very positive and successful one for the GraceKennedy Group. We have just finished our executive retreat, a 2-day retreat at the University of West Indies, Monday, Tuesday. And I'm also feeling very positive about the company for 2019 and beyond. You will recall that we are celebrating our 100th anniversary, February 14, 2022. And I think it's going to be very, very special. And we thank you, all of you, for your support for the last 97 years. And we look forward to your continued support for GK100 2022. Thank you very much.